Good afternoon, everybody. Good afternoon. Welcome back to Paul's Monday Market Update, number 193 for Monday, 1st September 2025. Summer is already over, isn't it? Welcome back, ladies and gentlemen. I hope you've had a good summer break. I hope you're ready for what is likely to be a rather eventful end to 2025. As always, just before we crack on, those of you who are here in the room for the live session, if you could just confirm that you can hear my voice and see the slides, I'd appreciate that. Just make sure the technology's working well. As I appreciate when you take a bit of a break, you're always a bit rusty with everything, aren't you? So we'll get through this. I'm sure we'll be. I'm sure we'll be absolutely fine. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can fit in the next sort of 25, 30 minutes, looking at strength and weakness within the FX and indices and commodities markets, having a look at a few charts of interest you might want to add to your watch list, and then looking at the live markets for the week ahead. It is just that, all right, it's a market update. It is not a signal service. It's not trade recommendations. It's just my view on the world, and that might be of use or of interest to you. As always, you are very welcome here, but just remember you're always responsible for your own trading decisions. And if you want a little bit more education, I will be running the Monday Market Matters webinar this afternoon for active trade, 2 o'clock London time. I'll be looking at how to use the COT report in your trading. You can either join them on the website or you can see that QR code will take you there. Okay, right. Let's dig into the main thrust of today's session. I appreciate if you're new to trading or if you're new to joining us, this might maybe look a little bit overwhelming or intimidating. It's not meant to be. All it is really an indication of it's some elements that I've cut out from my own weekend analysis that I do, my own model, the STAM, where I'm looking to identify the strength, trend, and momentum in FX markets, but then also in indices and commodities markets as well. So where are we? What is this telling me? How do I use it to help me? Well, we are into the 36th week of the year here. Where's the strength and where's the weakness? Euro, okay, remains top of the pile where you can see it's been for pretty much for the last few months. All right, very much a sort of anti-dollar trade, more so than a love of Europe, I would suggest, and that's probably reflected as well by the sort of US dollar sort of working its way back down into the sort of bottom of the pile, along with Kiwi dollar. Sterling, all right, sterling remains in second place as it has done for the last month. As I said, I think sterling and euro have done well off the back of an anti-dollar trade, more so than any particular love for sterling and euro, okay, themselves. But we'll be able to see that when we switch across to the markets themselves. Certainly, for both sterling and euro, there are some what I would call sterling and euro pairs that are in STAM buying environments, okay, and I'll work with them. Looking at sort of the rest of them, Swiss franc, okay, is still holding on in kind of in third place. Aussie has jumped its way up there a little bit. I think probably there's a few reasons for that. Part of it maybe is we had a little bit of Chinese data, which is perhaps not as bad as people had been expecting. Is probably the best way to look at that. Japanese yen kind of still flatters to deceive, really. People are maybe getting a little bit excited about maybe a rate hike later in this year from the Bank of Japan, but we shall see. All right, I think a lot of that sort of yen anxiousness or apprehension is not only that, but also the kind of ongoing sagas with tariffs and delays, and of course that has a knock-on impact to pretty much many countries and trading blocks, and that's what we see represented there. Certainly, if we had a look at the start of this morning's session, okay, in terms of how we started the month and how we started, when I look at that, we can see Euro, Aussie, Kiwi, Sterling, Swiss, all doing well there. A little bit of a kind of a risk-on theme to the sort of start of the day and of the month. Not a surprise there. Lots of people coming back, all right, getting a little bit. Certainly, lots of people in Europe are coming back, getting excited. Of course, we have Labour Day in sort of a public holiday in US and Canada, but a little bit of let's say, post-holiday giddiness. All right, we will see how long that works for. Certainly, Aussie and Kiwi and CAD and sterling all traded well for me this morning on an intraday basis, which we'll look at a little bit later. Looking at indices and commodities, what has interested me is that, of course, August is normally a very, very dull month, it's a very quiet month, but it's probably not the case this month, as we will look at in a moment. What has kind of been of interesting is that during what is supposedly dull, quiet periods, we have still managed to hit some new all-time highs for some of those American indexes. What I've noted, though, is the sort of momentum has waned there over the last week or so. Certainly, the Russell still remains in a strong bias. The DAX has actually gone tactically bearish, which we'll look at the chart of that in a moment. It's easier to see that. Nikkei and the ASX, remain strategic buys. Oil is still on a strategic short. Gold, all right, is gone back to being a strategic buy, and we'll look at that in a moment and see how that has traded higher. Silver has also had a very good start to the month. VIX is bullish. It's been drifting lower. Bitcoin is actually tactically bearish, and we'll see whether there's anything in that when we look at the charts in the moment. So, what I always say, as I said, there's a little bit of giddiness when people come back to the desk after having had a bit of a break. But, I think over the next couple of weeks, we'll start to get an understanding of the kind of theme. Certainly, everybody's going to be interested to see what the Federal Reserve do. And everybody, I think in the UK, my own view will be, unless the data is a shocker, I think mostly the UK will go sideways until we see Rachel Reeves' budget, and wonder how much we're all going to get stiffed by her and a team of little Resolution Foundation cronies. But that might just be me being a bit of a middle-aged man cynic. But we shall wait and see. All right, let's have a look at a few charts of interest. So I was putting just like 3 or 4 charts of interest, that people can either add to the watch list or, sort of learn from. And what I'm also trying to do is I'm trying to publish these on TradingView as well. So you might see there's a link in there. You might be able to either follow that link, or if not, just basically go on TradingView, look for FX Trader Paul. You'll see how there'll be lots of updates there. What is this? What am I looking at? Interested in? This is ISEQ, the Irish Stock Exchange, on a weekly chart. I think we looked at this a few months ago. It has been, for the most part, still in a good trend. Yep, there's been some pretty strong pullbacks there. But I mean, this was the old sort of tariff conundrum shenanigans. All right, pretty much everyone had a strong pullback on that. But what interests me is that we pushed higher than the sort of pre-tariff highs. You can see that there. And then I was starting to get interested that maybe we were putting in a possible double top, certainly when we had this bearish engulfing candle just sort of at the end of July. What we did is we actually pushed us that way higher, flushed higher, put in a bit of I would look at that as being kind of a bit of a spinning top indecision candle, and then I've dropped our way back here to what was the sort of pre-tariff highs is where we've dropped back to. We've also got the 20-period moving average we're running into the weekly one. So, listen, the moving averages have all been in a nice fan. We have been making higher highs, but I would look at this as now we're at a bit of an sort of inflection point here around about that sort of 11,300 level. And so what I'm curious about is, and what I'm watching for is actually, bang, do we use this as support, and then we push higher, which means back up to 1100, back up 11,800, back to 12,000. That would be the continuation, all right, of this trend. So I'll be watching the price action there. Or is it a case of that, we are starting to sort of run out of a little bit of steam here? Some people might see these 3 candles as a bit of an unconventional sort of evening star formation, which reversal after this kind of bearish engulfing candle. The thing is, I said, if we break this kind of level, if we break the 20, which, we've not really been beneath it, for since April, May time. And most of that was due to the tariff shenanigans. Pretty much most of of this year, other than that sort of 1, 2, 3, 4, that month there of the tariff shenanigans, we've been above the 20. If we were to break it, well, then you're looking down here on 11,000 as that kind of next level area if it's to break, and then I'd be looking for the kind of down here towards the 50 at sort of what's that are going to be about 10,700. So, as I said, we're at an inflection point here, okay, and so that's on my list to watch the price list, the price action to see how that plays out. Okay, so here is the next one. This is Apple. This is on a monthly candle, okay, and this is actually part of me being wrong, actually. So I try to share the good, the bad, and the ugly of what trading life is like. So this is Apple on a monthly chart. I do. Next to no real stock trading, okay, through August. I have a long term trade strategy called the monthly move, okay, which I do. I've just been working on it this morning. First the month to do it and set up. I tend not to sort of deploy it on August, etc. And when I looked at on the 1st of August and I saw this kind of what I'd call PO20, my kind of view was that I expected Apple to sort of probably drift lower back down to this sort of $200 area, where we've kind of seen, we've seen moves here before and kind of expected us to just drift lower and hang about there. But as I said, I was wrong. We did drift a little bit lower, but then we had a really strong reversal, really push high there. And I'm sure the fundamental guys will be able to give you lots of reasons why. Okay, with regards to sort of tariff and nearshoring work, etc., back into the US, etc. But really, I'm just looking at that, as a technical guy looking at that as that is a very bullish candle, isn't it? Sort of kind of drift towards 200 and then bang, end the month higher than $230, 232 there. Okay. So for me, then I look at that, that is pretty bullish. All right, that's pretty bullish. So then I start looking at, well, all right, well, where's the obstacles? Where do we go next? Well, not unsurprisingly, probably $250, okay, is I'd be saying is my kind of next target. And then you're looking to see, does it have enough bullishness now to basically work its way to new highs? Okay, and if it does that, what impact is that going to have on indices? Is that going to drag it higher? Because despite some American indices hitting highs, okay, in August, all right, not all of that is due to tech firms, okay. Quite a few of the tech firms have hit highs but have drifted off, but and Apple had already done it. But is this Apple sort of making a bit of a late comeback? All right, so as I said, I'll be watching to see how that plays out. See how that plays out this week. And then a final one before we switch across the live markets, because there's lots for us to look. This is cost, all right, Costco. So once again, as I said, I published this on TradingView as well. So by all means, if you're not following me there, please do so, and you can see it, because I will post up lots more stuff on there. Okay, certainly on the kind of the big weekly charts. So this is Costco, all right. So probably like many of you here watching this, all right, you've probably had a lot of dealings with Costco over the summer, all right. Certainly I have, and there's one just up the road from me here. And listen, as a consumer, as an investor, I'm all for Costco. I think they're fantastic. Okay, if you know what you're doing. But here we are looking at a chart, a weekly chart, and I'm curious because, as it says here, I think we're at a bit of an inflection point myself. So we had highs back early this year, okay, early sort of February. We printed this is a lower high, you're right here, and I probably should have drawn that in there as well. This is a lower. I see this as a lower high, and also it's a bit of a rejection candle. It's actually a really nice bearish pin bar, isn't it? Rejection candle. And what I look at is, we drifted lower. We got back beneath the 50, all right, which had acted as great support. We've bounced up. If you notice the 20, all right, the 20 is acting as a dynamic resistance. We can't close above it. When we do pop the big round number at 1,000, acted as has resistance there. This candle is of interest to me because, it's a rejection candle, it's an engulfing candle, it's a key reversal candle. We've also closed beneath the 50, and we're also back down here to what I'd call this kind of like supporting trend line. So my view is here is, does it have what it takes to bounce higher, back up to maybe so what's that, about 1,030, 1,040? Does it have that in it? All right. Or, do we get data that sort of starts to show that the American consumer is struggling a little bit, okay, and that basically they're spending less money, in which case companies like Costco might be struggling, in which case, I wonder if 50 and 20 start to roll over a bit and we kind of work our way up to sort of 960, make once again another lower high, all right, before we break this trend line and work our way back down towards kind of 800 area there. That would be quite some move. So yeah, as I said, it's at an inflection point. So it's on my watch list to watch. So I'd love to see how price action plays out here. I'd have a bearish. My view would be bearish on this. Okay, there's certainly lots to make a bear case there, but as I said, I'll just watch that price action, let it play the way, let it show the way to me, and then find a way to take a piece of it as and when I do. So Costco, you might want to add that to your watch list to see how it plays out. All right, so just the three charts today, just because there's plenty for us to look at on the live market. So if you just bear with me for a moment, what we're going to do is we're going to switch across to the live charts, and then we'll go through and see what's happening. So just bear with me for 1 moment. We'll switch across charts. Okay, so this is an indices and commodities element on my chart. So what have I got here? I've got this is Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, oil on the weekly, DAX on the weekly, Nikkei on the weekly, and FTSE 100 on the weekly. All right. Oil, once again, I thought I was wrong. I thought we would probably drift back to sort of 60 over the sort of summer period. But as you can see, we were actually, we didn't really make 60, did we? And in fact, if anything, we're kind of drifting high now. Of course, that could be a nice sort of bear flag before it does work to 60. But yeah, it's kind of, there's a bit of malaise there. All right. So, there's oil. But, as I said, let's have a look at some of these American indexes, because what we've had, let's look at S&P 500, shall we? All right, weekly chart. We have during August, okay, closed at weekly highs. All right, weekly highs. Now, last week was a bit of an indecision candle there, isn't it? But remember, it's the end of August. It's Labor Day today. People are probably just bored because, of course, things will start to waken up later on this week. Okay, when we get into some of those American data. Okay, so we've got PMIs tomorrow. We've got JOLTS Wednesday, we've got ADP Thursday, and then, of course, non-farms and average hourly earnings Friday. Okay, so this could just be the calm before the storm. But, I'm kind of curious to sort of see how we play out the daily chart. That daily chart is still bullish. It's still a bullish chart there, okay? It's still a bullish, all right? Regardless of what the weekly is saying, I would see that still bullish, all right? I'd need to break some of these levels before I start to change that view, certainly on the S&P 500. If you look at Nasdaq, though, remember what I just said there is that the tech firms, some of them have done well, but others have drifted off already. And the Nasdaq, having pushed and closed, all right, at new highs, okay, in the early part of August, you can see there we've drifted away. And last week was a bit of a dull. That's an inside bar, pin bar. Now, as I said, if it wasn't for it because it was the last week of August and we've got Labor Day, I might be kind of clamoring all over that to sort of take a tactical short. At the moment, as it is, I'm just going to watch and see, what does this week give us? As I said, the big boys will be starting to drift back, all right, over these next week or two, and then we'll start to get the idea of the real tone and the direction for the remainder of the year. But you just want to keep your eyes peeled in this first week or so. Dow itself, okay, worked its way up last week. That is kind of that was we've got sort of kind of inside bar, pin bar there, okay, which would normally be I would normally count to that to be sort of bullish. All right, it's showing that there is still momentum of pushing up. But as I said, we'll have to wait and see how we get through after kind of the Labor Day comes in and we start drifting back into it to tomorrow. Russell pushed its way up as well there, but even last week there on the Russell, there's there we've got a bit of an indecision doji candle there. As I said again, end of August, all right, Labor Day today, not a massive shock. What's probably more of interest is if we look a little bit closer to home, this is the DAX. All right, this is the DAX on the weekly chart. And, the DAX we can see here early in the year, we drifted and fell strongly, but we were the DAX was the first back to new highs, okay? Led us to new highs. But really, you'd look at that over the last few months, and you wouldn't be terribly excited about that, would you, really? That price action there's nothing really particularly pretty or attractive about that. And what is interesting is that we were starting to see here better data coming out of Germany, or rather, it was not as bad as it had been. The German data had been bad here, but it hadn't stopped. It hadn't stopped the DAX being sort of pushing higher on what basically SAP and Rheinmetall. But I look at that price action there. That doesn't exactly that doesn't make me want to be a buyer. Doesn't really make me want to be a seller either. It makes me just want to sit and watch, okay, and sort of just and just kind of like keep in some just add it on a watch list and just see, is it coiling up? Is this this is what I would normally expect over the summer? All right, just coil up and then come into September and we'll make our decision. All right, and at the moment maybe that's it. Maybe we're just basically pivoting around 24,000 until somebody makes their mind up. FTSE, okay, we have worked our way highs, okay, once again, despite it being August, despite the, let's say, the less than complimentary data that's coming out of the UK, or less than complimentary commentary coming out of the behaviour of the Chancellor and her plans for the budget, we have managed to still push our way a little bit higher there, etc. But last week we printed a bearish inside bar. As I said, it'll be over the next week or two that we get an indication. My own view is I think we probably go a bit sideways until we get to the budget. That would be my kind of overall view on that. That's the way I would look at that with the FTSE. Right, let's have a little look at some of commodities. Well, actually, crypto first. Bitcoin. We've the thing that's interested to me is that there's actually quite a few. This is the weekly chart of Bitcoin. We pushed to highs, okay, fallen away there, okay. The thing that interests me is that there's actually quite a few instruments across different asset classes that have pulled back to their 20 over the last couple of weeks. That in itself, as I said, just an indication of the kind of last couple of weeks of August, the malaise that we get, but also an indication of, we're pulling back, we're making decisions, over the next week or two. Does Bitcoin push higher? Does it roll over and touch 100? I think if it basically holds above 110, that is me still what I would call tactically bullish. All right, a break beneath this kind of area, this kind of 108 to 110, beneath that 20-period moving average. If it does, I'd see us going to test 100 again on Bitcoin. Look at gold. I've done a piece on this on TradingView as well. This is gold on the weekly chart. That is you might say that's a summer price action. We've just coiled up there, haven't we? Just coiled up. The 20-period moving average has acted as really good support, and then bang, here we go. Bush, we're breaking out, and we've broken out in the last week or two and pushed higher. Now, is that an indication? Is that a leading indicator that basically the big boys are already worried about the rest of the year and are piling in, or is it just something else? Either way, I would look at that as, this is a triangle. A symmetrical triangle is a continuation pattern. If you're a classical technical, you would basically be looking for us to, this is the flagpole, this is the breakout, and you'd be continuing expecting a very, very bigger look. I don't project that far forward myself. I'm really only interested in the next couple of weeks to next couple of months personally, because that's what I want to get a piece of as a trader. As an investor, I'll be different, but as a trader, that's what I'm looking at there. So keep an eye on that. Certainly one of the others leading the way today has been silver. Let's bring silver up here, okay? Come on. So let me just move this out here, and then let's bring up here. Come on. And clearly everybody is logging in to watch it. There we go. Silver. All right. If we look at the weekly chart, Silver had been what I would call an unconventional coil, but has broken. And today, last week we got up to 40. This week on the daily chart, we've kind of cracked through $40. That's what I'll be looking at. There we go. That is, we kind of this bullish bounce off the 50 period moving average, okay, which has acted as support before. Once it broke that line, came back and tested. I mean, that's just kind of classical trend following analysis. Beautiful, pulls back to support, pushes its way higher. You don't really want to get too more excited than that, or rather, that's just what you're aiming for and you're looking for. That's what everybody particularly wants, okay, to work with. So we can see how those have basically pushed their way higher. Now, what I'm going to do is bang. All right. Whilst it makes its mind up about the dollar, let's have a look at euro for the time. Let's keep going. So, what is of interest to me, which we'll look at in a moment, is euro against the US dollar. Bang, uptrend, quiet summer. Interestingly, the last couple of candles here, okay, they are kind of what I would call bullish momentum pin bars, as in they are supporting the existing trend, the momentum of the existing trend. That's what I'll be looking at there. If we look at euro yen here on the weekly chart, I'm kind of curious that having had a fantastic run, we've printed this big bearish engulfing candle, key reversal candle, and then really we've just coiled up over the rest of the summer there. Euro sterling we'll look at in a moment as well, but euro, it still remains in a strong uptrend against the Canadian dollar, against the Aussie dollar, and against Kiwi dollar. But Kiwi dollar is completely weak. It is the bottom of the STAM. What kind of is of interest is you've got euro in number one, and then Swiss franc has basically been bouncing around second and third. And actually, if you look at that, really, for what is that now? For almost like the last 6 months, euro Swiss franc has just basically been bouncing around in that kind of range there, hasn't it? So, if you're a range bound consolidation trader, fabulous, more power to you. If you're a trend trader, euro Swiss has not been the one to play with, and that's not a surprise. My whole thing of STAM, I think that unfortunately it just doesn't want to play. We might have to cut the dollar out today. The whole thing about the STAM is I want to be buying strength versus weakness, and if both euro and Swiss franc are strong, well, it's no surprise that the price action is going sideways. Okay, that's the way it will work. All right, here we go. Finally, okay, decides to make its mind up. So, this is one of my sterling charts. Okay, sterling here. Okay, pound against dollar, euro against daily, pound against Aussie, pound against Canadian, pound against New Zealand, pound against Swiss franc, pound against the yen. So on my intraday trading this morning, most of that, here we go, pound against Aussie was basically just shorting, all right, shorting sterling against Aussie off the back of that good Chinese PMI. That was a nice trade for me. Pound against New Zealand dollar did exactly the same as well. Okay, basically this is all VTP stage 3 stuff, sort of trading back into that. Okay, pound against Canadian dollar did the same as well. Okay, so just basically trading back into the range there. So that those condols, they all benefited from the back of a kind of little bit of those Chinese PMI data. But let's have a look at cable. All right, let's have a look at cable on the weekly. It all seems to have slowed down massively, doesn't it? So weekly chart. Once again, we have got basically what I would call, regardless of their closes, I would still call them kind of bullish, momentum supporting pin bars. All right, they are the moving averages are supporting them. So that would be a case of sterling strength and dollar weakness there. Okay, which is what I'm seeing across the STAM, and also the price action is kind of supporting that. Daily chart, I would be looking at whenever. You hear me say it before, whenever price and the moving averages are all in cahoots together, I always see that as price kind of coiling up, all right? It's the sort of calm before the storm. It's the compression before the expansion. It's no surprise that, the last couple of weeks of August, that's what we've seen. Now I'd be looking to see, well, okay, are we going to get a bit of sterling strength pushing higher? And, or probably more close to the truth, are we going to get continued dollar weakness? That might be the close to the truth. If we look against pound against Japanese yen, we broke out of a trend line. We came back and tested it and pushed it. Okay. I can't exactly say I'm terribly excited about pound against Japanese yen there at the moment. All right, if apart from the big sell-off at the start of August, uh, if I look at that price action, there's nothing really there. That's getting me terribly excited. All right, there at the moment, that'll change as the next couple of weeks. If I look at pound against Swiss franc, I look at that as kind of almost like a double bottom, almost a treble bottom. We have tried to push. We did try to get a bit of a Swiss francs sell off. I think that was more SMB manipulation, but that just might be me being a kind of a cynical old sod. But it didn't. There hasn't been any follow through yet. And once again, daily chart, pound against Swiss franc, we just pivoted around that daily 50, aren't you? You've got the averages, the price all together, calm before the storm. I suppose if you were to look at it, you might say, well, Paul, you kind of had a double bottom, a treble bottom. Could this now be basically, a higher low? All right, could this now form a higher low, which would be basically a move towards the 200 period moving average and the daily? Maybe, as I said, we'll see if if that price action kind of starts to get a little bit more exciting over the next week or so. And then finally, euro against sterling. Yeah, there we go. That's been your last 2 or 3 weeks. That's been your last 2 or 3 weeks of August. Price and the moving averages all coiled up now. So now we need to see something that will basically shift it. The interesting thing for me is euro against sterling, having had that fantastic uptrend. I would look at this as, there's a bit of a double top there with the second leg ending with a bearish engulfing candle. This is a case of, if this breaks lower, then I think we go to that 200 down at sort of kind of 84.80. All right. It's a case of we're in that consolidation. Are we going to expand out of it? Are we going to see some euro weakness and sterling strength? And then you have to look at, well, what would need to happen to give you confidence in sterling and weakness in euro? All right. We will, I suspect we'll find out over the next week or so. Okay, ladies and gentlemen, let's draw it to a close there. Okay, I apologise that there's a little bit of a slowness there. Okay, clearly over the internet, but hopefully that has given you a little bit of insight, a little bit of help into coming back to market to have a look at what's going on. It's going to be an interesting week from tomorrow, okay, when everything starts to heat up. The Americans are back in town and plenty of data coming out. So make sure you're managing risk, make sure you're on top of your analysis, make sure you're on top of the news flow. And I hope you have a fabulous trading week, ladies and gentlemen. And I look forward to speaking to you soon. Take care and trade well, everybody. Cheers.